Hello, everyone. News events can make or break your trading, and the FOMC event is one of those events that comes around very, very often, monthly at that, and traders rejoice and they're super, super either excited or very fearful from it. So these individual days can be extremely opportunistic if you know how to trade them, or they can be really, really soul-crushing. Now, I'm going to be breaking down a trading strategy for the FOMC that you guys can use as the event rolls around. Now, obviously, I'd want you guys to back test it, and we're going to be breaking it down on the future specifically. We'll be going over the S&P 500 and seeing the recent patterning that we've noticed over the past few years in the FOMC events. So, generally speaking, this is one of the last events on May 1st. I'll show you guys some other events here that I've broken down with our team here, right? It's a trading strategy that I posted on May 1st. So generally speaking, right, if I can open up some of these images from some of the last FOMCs that we've noticed, right? So this is going to be January 31st, and then beside it, we're going to be taking a look at March 20th. So the general process for these FOMC trading events and these strategies, so to speak, are that you obviously get some news out of it. There's a difference between the FOMC meetings and the FOMC actual rate changes and those events where Jerome Powell comes on, he has a press conference, he does a little speech, he does a Q&A, and then the meeting minutes, which are prepared beforehand, and they're just shot out by the news. So when we're talking about either or, right, there is an ebb and flow that we can take a look at. Realistically, in the FOMC trading, right, in the event itself, in the overall rate decision, well, we get at 2 p.m. Eastern every single time, right? They happen on a month-to-month basis. You can take a look at them on FedWatchFutures.com to see where they, when they are, right? What the expectation is for the rate cuts or the rate decision on that day. And if we just jump into it, it's a CME tool over here before we dive too deep into this strategy per se. But if you go like CME Group, right, or you just type in FedWatch Futures, you'll see all of the events that are staggered over here. So the next one that we have that's of importance is going to be June 12th, which is coming up in a very short period of time. Now, you can see the current Fed's funds rate is sitting at 525 to 550. So there's about a 99% chance that it stays the same and a 1% chance that they actually hike. So you can see here July 31st, right, the odds, so on and so forth, deep into the end of the year by December 18th, 2024. There's an expectation that there's a higher probability that there is at least one rate cut by that time. So at 2 p.m., we get a rate decision or we stay flat, whatever the case may be. They announce something. And generally what happens, right, you want to be very diligent, not trying to anticipate what's going on, because even if it's a rate cut or a rate hike, whatever the move might be in anticipation of that, the market might react in a completely different way realistically. It might do something completely different than what you're expecting. So as we look at this, right, you just want to base your trading on the reactions themselves without diving too much into, oh, I think XYZ should happen, this and that should happen. So you generally get a primary move, right? The primary move is the first move that comes out right from the announcement at 2 p.m. Eastern. So that primary move is most likely going to be the deciding move that continues the trend for the majority of the afternoon or even into the end of the day realistically. So as we look at this, that primary move, you want to take note of it because you're going to try to follow that primary move. Usually there's going to be pullbacks in that primary move, right? Those pullbacks in that primary move, the first one, they don't necessarily have to coincide exactly with the highs or the lows of the primary move. But the first one has an okay probability. The best probability you're going to have is most likely going to be the second pullback that you actually get in the market. That's going to decide the majority of the movement and the trend that persists. So the lower risk is the secondary pullback. If we take a look at what happened here on January 31st on my screen, the first move off the FOMC decision, right, is a drop. We go from 49, like 15, 20 area all the way down into 49. So about a 20-point drop, 15-point drop. You get the first pullback into these areas, right, that try to break the lows. They're not bad trades, right? You're getting like 10-ish points from those areas. And on the second pullback that kind of breaks above, you can find where it tops out, and that's going to be your general larger move that has a higher probability. If we take a look at another example here from March 20th, right, the primary move at 2 p.m. exactly, right, whatever the rate decision might be at that time, you can see that that primary move is to the upside. We make a move from 52.40 all the way up into 52.60. Now, obviously, we can add some kind of confluence and confirmation into those areas. So obviously, I'd be looking for distributions. If we accept into a new distribution or a different distribution, that's going to dictate where we can actually find that support structure, right? And I'd want to follow that movement. So here we get the first pullback that drops into the distribution high of 42.48. The secondary pullback into that area, and then we zip and we continue. We want to look after that secondary pullback that makes that continued move. We want to look if we're actually accepting into new distributions and holding different balances rather than starting to change structure. It's very important because there are going to be some events that I'm going to show you that actually change that structure. So, for example, we take a look at May 1st. May 1st was another decision event. So at 2 p.m., if we can outline where we have gone from this, right? If we take a look at this arrow tool here, we get a move from 2 p.m., right? That moves up generally. We get a decent move to the upside from that move. This is the first pullback, right? We push up, the secondary pullback, and then we get this very large trend continuation. So the secondary pullback is going to be the higher probability pullback that allows us to get in on this move. Now, of course, I'm not saying that this is the be-all and end-all. We're going to continue to zip in that direction indefinitely, but there is vast opportunity in this move just from this first initial 30 minutes, hour, even before the press conference begins. You can see we do attempt to make moves higher, but eventually, right, what happens is we get a change in structure that allows prices to actually turn around. So we do have to be cognizant of that because until the end of the day, we just erase everything. So if we just constantly buy, second, third, fifth, 19th pullback, then is going to be trouble for us. So I want to make sure that I'm aware of where the first pullback is and where that secondary pullback is. If we take a look at the most recent meeting minutes, right, this is not the Fed event in itself, but we get the meeting minutes that came out just yesterday, actually. This is what prompted me to actually film this video and get a better understanding of what's going on. So yesterday, we had a very decisive move to the downside. So the initial move that came in was a downside press, right? If we come into here and we grab our arrow tool, right, at 2 p.m., what happens? We get this very nice, clean drop. Now, again, we have to keep in mind that the first, secondary pullback are going to be great, but if we start changing structure, then things might turn around. So here's the first pullback. We get a nice drop from here, right? And then here is the secondary pullback, and then we get a nice clean drop from there. So that's the opportunity in that. I'm not saying that, oh, okay, be all and end all, we have to trade every single pullback that we get, because we have to keep in mind structure, where we are in terms of the balance and positioning of this market as well, and what's going on. Because if we fail to make new lows here, right, eventually we get this sweep up. Obviously, there were events like NVIDIA's earnings that were coming out, which I would say influenced the movement of this, right, clearly. So generally speaking, I would want to be on the first or second pullback. The higher probability naturally is going to be the second pullback. But if you take a look at past Fed events and you notice the first initial move, right, that happens right off, right, at 2 p.m., you're going to get a very, very good understanding of what the expectations of these markets are. So even if I take a look at this from a structural perspective, because we always want to keep that in mind. It's not like, oh, okay, I'm just going to indefinitely look to sell this. Yesterday on this move, if we get rid of some of these, and we take a look at our distributions here that are super handy, we break a key decisive distribution at this 24 area. You can see this ledge. Once that topples over, right, we have an acceptance into a distribution lower. Where's the low band of the distribution around 05 where we bottom out? So realistically, I also want to keep in mind that I want to follow the distributions and the structural perspective of this. So, okay, great. We get two chances here. They try to push. They can't make new lows. What's going to happen after that, right? There's a potential acceptance that we get that leg higher that pushes us into a new distribution to the upside. So, like I said, this isn't a be-all and end-all strategy that you just like close your eyes and do this, but there is an extremely high probability that the first move is going to have a good extension for the opportunity even before that press conference appears, because the press conference, they can say XYZ and things can alter very quickly in that manner. So to reiterate, right, when I'm looking at the FOMC events and the events around the FOMC, the rate decisions as well as the meeting minutes, right, the rate decisions are a lot more important. Meeting minutes, In these current conditions with inflation worries and so on, there is a there's a probability that those meeting minutes are actually going to shape up and give us some kind of movement. But generally speaking, when I'm looking at these, right, with these Fed events, the rate decisions, I want to be very, very aware and perceptive of that first initial move that comes. And I'm going to be trying to hunt where that first and second pullback are so I can see the continuation of that move that allows us to find some good opportunities, right? Because if you're getting 20, 30 points off these moves, off these continuations, you have a very, very great trade right there. So you can use these for futures in equities, specifically S&P 500 and the NASDAQ, and go back test these and see how these opportunities shape up. So with that, right, I want to end this video. It was a short one. It was a quick one to break down this strategy, and I hope you found it useful, and we'll be back with more.